welcome to the Policybazaar Show. I'm Chaiti Narula. The union budget is just around the corner. With a few weeks to go, similar to every year, individual taxpayers are really hoping for a budget that leaves more money at their disposal. And that is just an expectation year after year. This is especially considering the hardships and challenges caused by the COVID-19 pandemic on their livelihood and on the overall economy as well. Given the renewed focus on the insurance sector in light of COVID pandemic to enhance insurance coverage, the industry experts believe that the government should leverage Budget 2021 to mitigate individual and industry distress to some extent possible. Today's topic is tax saving guide and expectations from Budget 2021, and joining me to understand more about this, we've got the ever so dynamic and charming Santosh Agarwal, who's the Chief Business Officer, Life Insurance of Policybazaar.com. Having joined Policybazaar in 2011 as an assistant manager, business development, Santosh has helped bring a major transformation in terms of market share and product innovation as well in the life insurance vertical. Her performance has been remarkable, particularly in driving the term insurance business, helping Policybazaar.com acquire 50% share in the online term insurance space. Welcome to the show, Santosh. What a pleasure to have you with us.
Thank you so much. It's always a pleasure to be here.
Along with her, we have with us the dynamic Amit Chabra, Health Business Head, Policybazaar.com. Amit has over 10 years of work experience across top-tier management consulting firms and high-growth startups in India and the United States. His past portfolio includes consulting focused on strategy engagements in the telecom, media and technology space in India and the US markets. The key areas of expertise include corporate and business unit strategy, growth strategy, product strategy and innovation. Welcome to the show, Amit. What a pleasure to have you.
Thank you, Chaiti. Always a pleasure.
Let's start off, Santosh. We're amidst the tax filing season when people are busy making investments under different products to avail tax rebate. What would be your advice to the people investing their hard-earned money?
I think one thing for you to first assess is how much is the amount of tax that you can save, and that can be important. I think number that you should know before you start deciding, on how to go about investment. Just to give you a sense, if you are in the 30% tax bracket, which is you're earning more than 10 lakh rupees, the amount of tax that you can save is sizable. It's 46,800 rupees. This is including the 4% cess. So this I think is a meaningful amount for anybody. There are three ways I think you should go about it. What is the age bracket you are in? What is your current I would say family status. If you just joined a job or you just started working and you're very early in your career, you may want to assess products that are for a bit long term. Products that you can stay invested for 10 years, 15 years, because they can be a meaningful way to save a large sum of money. And at the end of 10 and 15 years, you could get a huge amount, which can help in making an investment like a house purchase. So at an early age, if you start investing, say in a ULIP, and you lock yourself in for 15 years, the amount of money that you get after 15 years can be sizable, and that can go towards making a big purchase. Again, if you are say in the age of say 35 and 40, and you have children, the important thing, and a lot of people may not know this, that under 80C, the principal amount that you pay for your home loan, that is also considered under 80C. And children tuition fees, so it's the tuition fees for up to 2 children is also considered around under the 80C, another with the 1.5 lakh amount of tax amount that you can save under tax. So these can be considered, should be considered if you are in that age bracket. And if you are if your age is about 55 years or 60 years and you're moving towards retirement, then the products that you should consider are products which will generate pension for you after you retire. So products like annuities, pension plans, NPS are the options that one should consider when they're nearing the retirement age. So I think depending on what your current age is and what are your liabilities going to be in the future, you could take a call.
Moving on to Amit now. Amit, if you could just tell us what is the minimum deduction that one can really claim under Section 80D of the Income Tax Act?
Sure. So the way it's defined by the government of India is that you can claim two types of deductions for health insurance. One is for buying a policy for yourself, where the maximum deduction that is allowed is 25,000 rupees. That is if your age is below 60 years. If you're above 60, or let's say you're buying a policy for your parents, then the limit increases by quite a bit. So then you can actually buy a health insurance policy worth 50,000 rupees additional. So net, what we're saying is if you're buying a policy for yourself and for your parents, then you can save up to 75,000 rupees in taxes because you're investing in health insurance.
And Santosh, what is the maximum deduction that one can claim under Section 80C of the Income Tax Act, and what are the different products available for the customers that one can stay invested to stay financially protected while getting the maximum returns? And we're not just talking only about ULIPs here.
So the amount the amount of money that you can invest and save tax on is 1.5 lakh rupees under Section 80C. And there are various, I would say there are 3 categories of products that are available for tax rebate under this section. One is the savings category. Under savings category, you have say PPF, you will have term life insurance, you will have various kind of fixed deposits, the 5-year fixed deposit that's there. So all of these are savings products that are eligible for tax deduction. Then there's an investment category, and investment category would mainly be ULIP, mutual funds, ELSs to be precise. These are instruments that one can invest in. And the third is the expense bit. Under the expense bit, you have tuition fees that you can avail tax rebate on under Section 80C. In the first category, I think one also important aspect under the savings category would be the principal amount that you pay for your home loan. And another fact which is less known is the amount of money that you pay for registration or stamp duty if you bought a new property. Even that is eligible for tax deduction under 80C.
That's very interesting. Now, Santosh, the tax numbers show that salaried employees pay more in taxes compared to business owners. What's your take on it? Isn't this really unfair?
So yes, if you go through the budget 2019, we did understand that the average amount of tax paid by salaried people is 3x that of non-salaried. And that is true for obvious reasons, because salaried people, the tax is deducted at source. So there is no way for you to evade taxes. Whereas non-salaried people need to self-declare their income. And there are ways and means of tax evasion. So that's, I think, widely known fact in India today. There are measures that the government did take for non-salaried people to start paying more and more taxes. And by making sure that taxes are deducted at source. For example, if you are making foreign remittances, then tax will be deducted at source now. If you're buying a vehicle or a car which is fancy and above costs more than 10 lakh rupees, tax will be deducted at source. So there were measures that were taken by the government to ensure more and more non-salary people come under the tax scanner. But even then, today, large part of the tax is collected through salaried individuals. That I think puts a disproportionate burden on the salaried class.
All right, Amit, in the year 2020, we saw the launch of standard health insurance products, standardization of health insurance policies, and an increase in demand for health insurance, of course. What else can we expect from the health insurance industry in 2021?
Some of the things that we think may happen is, if the government wants to promote health insurance, the tax rates on health insurance might come down. So right now, if you buy a health insurance policy, then there is an 18% GST that's applied on health insurance. Now, health insurance is no longer an optional item or a luxury item. It is pretty much a mandatory purchase. So I think if the tax rates do come down a bit, that will definitely encourage more people to buy health insurance. Apart from that, I think another important factor here is the large number of actions which the regulator has taken to promote health insurance. So starting from the coverage for COVID to standardization to a lot of comfort that is provided to customer regarding their claim. There's been a lot of stuff done by the regulator to promote people to buy health insurance. I think that theme is going to continue. What we're going to see is more customer friendly products, products which are easier to buy, easier payment methods like EMIs and all are becoming more and more popular.
Santosh, with standard life term insurance products, Saral Jeevan Bima expected to go live with more insurers anytime soon. What do you think is going to be the response of the customers? Also, if you could please elaborate on the premium calculation methodology as well.
The Saral Jeevan Bima, I think, is a very good measure taken by the regulator. Like the name suggests, Saral means simple. So this product has standard terms and conditions, features and benefits across products that you buy from any insurance company. So it'll be easy for anybody to understand, and you may not need a huge degree of financial literacy to be able to appreciate these products. So it's a product for everybody, anybody who has an earning income and is responsible for their families will be able to buy this product. And now, because you are making this product for the masses and everybody will be included, it is logical and obvious that the premiums will be higher than the current term life insurance product. For example, for a 25 lakh of cover in the current term insurance retail product, you would approximately pay 500-600 rupees a month. Under the Saral Jeevan Bima policy, you will have to pay approximately 800 to 1,000 rupees per month. But having said that, though it's slightly more expensive, today's term retail insurance may not be available for you, whereas Saral Jeevan Bima may at least be able to cover you from a financial standpoint. So I think the increase is not too high for you to start, ignoring the product. I think it still makes a lot of sense that you have to pay just 800 rupees or 1,000 rupees a month and cover your family for a 25 lakh rupee cover. So it's still, I think, the investment amount to the return that you generate and the peace of mind, more importantly, that you bring to your family by buying a product of this nature is still, I think, very important and very meaningful.
All right, that really clears it all. It's time now for a very short commercial break here on the Policybazaar Show. Stay tuned, we're going to be right back. Welcome back. Thank you for staying with us here on India Today. You're watching the Policybazaar Show with me, Chaiti Narula. Today's discussion is tax saving guide and expectations from Budget 2021. And to help us understand more about this, we've got Santosh Agarwal and Amit Chabra from Policybazaar.com. Now, Amit, the expenditure on healthcare is bound to increase. And with the job sector having taken such a massive hit in 2020, we saw, what do you now foresee as the changes that in the upcoming budget that could perhaps help the people who are making a comeback to their job and to their normal lives? As we already know, people are now finally limping back to normalcy, and there's some sort of normalcy that is coming back into the market.
I sense that the theme is going to be around encouraging people to buy health insurance because it is no longer an optional item. It is pretty much a mandatory purchase that people must do to safeguard themselves financially. So two immediate items which I see can encourage people is one is the GST rate on health insurance. Today it's 18%, which is typically put on luxury items or optional items, whereas health insurance, which was in the past considered an optional item by a lot of customers, is no longer the case. It is a mandatory item, mandatory purchase for customers. In fact, it is the first purchase when it comes to financial planning. So if the tax rate is lowered, I think that will definitely encourage a lot of customers to come into the fold again, because it makes the overall ownership of health insurance cheaper for customers. I think the other interesting thing which COVID has brought in the last year or so is a lot of people now are buying high sum insured plans. So typically people used to buy 3 lakh, 5 lakh sum insured plans, but now that trend is also changing, and we're seeing people buying plans which go up to 50 lakhs or 1 crore rupees sum insured as well, which is, I think, the right thing to do, because as medical inflation is happening, and with things like COVID in the picture as well, bills do stack up quickly and to a very large number. So buying a high sum insured plan does make sense. Now, in order to encourage that, I think one very important factor is the current limits for tax deduction. So currently, if you are below the age of 60 years, the maximum deduction that you can take for health insurance is 25,000 rupees. Whereas we see that there are a lot of customers who buy expensive plans, plans which go up to 40, 50,000 rupees or 60,000 rupees as well. So I think if this deduction limit can be increased from the current 25,000 rupees to say a 50,000 rupees for everybody and not just for senior citizens, that will further encourage people to buy a high sum insured plan, which I think is better for everybody, for the economy in general, because it means people are more secure and more immune to financial losses that may happen because of their health.
Right. Moving to Santosh now. Santosh, there are just a lot of concerns regarding the rate of GST implemented on insurance products. Even after being an important financial protection tool, the rate of GST on insurance is equivalent to GST on any luxury item. Now, do you also agree that there must be a recommendation now to reduce the GST on something as important as insurance and not bracket it under the highest tax bracket under luxury goods?
Absolutely, Jackie. I think that is something that we all should present to the government to be considered, because it is a necessary purchase, and it is something that every individual who is securing or protecting their family should buy. If there are family members dependent on your income, it almost becomes a necessity and not a luxury item, and hence applying a GST of 18% would not make sense. So that is something that we would recommend to be considered in the current budget. And if that can be brought down, because this 18% GST is just not one year of premium, this is every year. And generally, a product like term insurance, a life insurance is a 40, 50-year-old product. So you would want to keep the product for, till you retire at least. So 18% GST every year on your premium can be a hefty amount that you pay as taxes.
Santosh, do you also reckon there could be a recommendation to make annuities tax-free? And if yes, how best could the segment be refurbished so as to make it more attractive to the consumers who are planning for their retirement as well?
So one thing is that the investment in annuities up to 1.5 lakh rupees is tax-free under Section 80C. However, the proceeds that you get from annuities, those are taxable. And if that may be made tax-free, that will help a lot of pensioners, to enjoy their pension amount without having to pay taxes. And at that age, that can be meaningful. The other element here is that bringing annuities or pension plans at par with NPS, where under Section 80 CCD 1B, you also get a 50,000 rupees over and above the 1.5 lakh rupees under 80C as tax-free. When you invest 50,000 rupees additional through NPS, that's an additional amount that you can save tax on. So if that can also be applied to annuities and pension plans, that will also make these at par with NPS. And then customers, depending on their options, can decide whether to invest in annuity or a pension plan or NPS. So I think both of these are important, that the ADCCD 1B should also be applied to pension plans and annuity plans, and also the proceeds from these plans should be made tax-free. So that would be the recommendation to the government, so that both of these can be considered.
I'd like to now ask this question to both our guests. 2020 has been a year where the demand for insurance has gone up significantly. Now, people think of insurance as a protection product and not just a tax-saving instrument anymore. However, there is a problem with insurance penetration, which in India is still on fairly the lower side, and you'd agree with me. What are your expectations from Budget 2021 that you think will increase this insurance penetration in India? Starting off with you, Santosh.
So one thing, like we discussed, is if the recommendation on reducing the GST from 18%, if that can be considered, that will bring a huge boost in encouraging people to buy. There is one more product that has been launched by the regulator, which is Saral Jeevan Bima, which is a standard term plan that has all terms and conditions and benefits remain constant across any product that you buy from any insurance company. That makes the product very simple, and it's just completely transparent for customers to understand. The important part being that this product will be given to everybody who has an income, and you cannot differentiate, or you cannot I would say not get the product depending. You cannot say no to somebody who is not as much educated, or basis on gender, or basis on where the person lives. You cannot say no to a customer, and hence every every customer who has an earning capability and is supporting their family will be able to buy a term insurance plan through the Saral Jeevan Bima policy. And I think that will go a long way in insurance penetration.
Amit, where do you stand on this one?
I think the budget, the theme should be to encourage more and more people to buy health insurance. I think that is very, very clear. Now there are various ways of doing it. One, as we discussed, is reducing the GST, the tax rate, so that it becomes more affordable. I think that's the lowest hanging fruit. Apart from that, if the reduction limit can be increased, so that people are encouraged to buy high sum insured plans, I think that's another very tangible thing to do. In the long run, I think what also the government should start to think about is how do we give people more incentives to have health insurance? Because for an economy like India, which is a growing economy, it's very, very important that people are financially secure, and you don't want people losing their savings because of a health condition, and that happens a lot in India right now. Almost 2/3 of all healthcare costs are paid out of pocket. So I think if there can be some mechanism through which people are incentivized to buy health insurance, it's almost like a credit score equivalent, where we are saying that if you have health insurance, you become eligible for a certain kind of benefit, or a certain kind of you get some benefit which you otherwise won't get if you don't have health insurance. I think that will also be an interesting thing to look at, because eventually the government does want everybody to buy health insurance, and that goes along with the entire theme of government also providing health insurance to the poor, and also encouraging people who can afford to buy themselves. So I think overall, encouraging more and more people to buy health insurance has to be the core focus.
And lastly, do you expect the same pace in the demand for health and term insurance products in the current year as well, Amit?
I think it will increase, to be very honest, because while there was a lot of awareness for health insurance and term insurance, what was also happening was there was a money crunch with a lot of people. People were losing jobs, there were pay cuts happening, businesses weren't doing that well. I think now that the economy has opened up, that crunch is actually going away. So people now have money, and they're realizing that buying health insurance is very, very critical for them. So I think the next year is going to be bigger, and there would be a lot more demand coming in, a lot more pull coming in from customers who want to buy health insurance.
Santosh, are you in agreement with that? With people limping back to normalcy and having a larger budget in terms of disposable income as well, you will see an uptick as far as health and term insurance products is concerned, and the investment in the same is concerned? Or do you think that because now the pandemic is over, everyone's going to say, okay, we're done, we're not buying health insurance?
No, I think the pandemic was just a trigger, and it did tell consumers that these products, health insurance or term insurance, these are very important financial tools that one must have. And I think this is just awakening of what these products and insurance is a necessity. I think that was well understood, and that will continue to stay. A lot of people may not have been able to buy it this year because of financial reasons, because they may have lost jobs or because of pay cuts, etc. And as normalcy returns, and as they're able to save more, they will start investing into some of these products. And I think the demand from here will only go up.
All right. Well, with that, that's all that we have for you this week. Thank you, Santosh and Amit, very much for joining us today with this insightful discussion. Keep watching the Policybazaar Show. This is Chaiti Narula signing off.